Hi guys, in this lecture we will discuss MACD. What is MACD and how to look at it. The first thing is MACD is this way. There are two lines and there are these like bar chart lines. They are pointing up and they are pointing down as well. Now what do they mean? First let's discuss these lines. These lines means whenever they are above 0, they mean that it's a bull run. The crossover has happened. So on the first crossover, it's a smaller line and then the line moves higher. Now the higher the line, the higher the difference between the blue and the red line. As the lines contract, as these red lines falls, then the gap between the red and blue line contracts. Whenever they move down, see, they are moving down. That means the crossover has happened on the downside. So in simple words, whenever these lines are drawn on the top, that's a buy signal. Whenever these lines are drawn on the bottom, that's a sell signal. As simple as that. Second is lows. If I just zoom out, I will show you whenever the lows keep on increasing higher, then it's a bull run on the price. Right here at the lowest point, the price was 1283, and if I can find the highest point. As on this current moment, this is the highest point. So from 1293, it went to 2378. That's a that's an $11 gain. That's a 50% gain. And all the lows are higher. Then at this top moment, if you look at it, the highs stop increasing. Although the lows are not decreasing, but the highs are not increasing. Right here, the highs were increasing. This is the first high, second high is higher, third is further higher, fourth is further higher, fifth is around more higher, but sixth is not higher. And if I move further, then this low was higher, this second low was lower, and this third low was lower. And eventually the fourth lower is further lower. So this is the learning thing. Whenever the highs keep on increasing, you make good money. Whenever the lows keep on decreasing, you might not make money. It doesn't mean that the market will fall off, but it does mean that it might not make you money. It might go flat. It might go straight. It might not go up. That's the rule. Second, whenever it makes a double top, then even it means a change in trend. Now it doesn't mean that it will fall. It means a stopping of trend. Now if you look at it, this high is below this high. So this is a double top. And after this high from 29.13 till here, it's a flat trading. It's trading within two lines. That is this highest point. If I make a line, this is the highest point. I've made a line. It went straight. It did cross it, but it was not a strong cross. It stopped on after crossing it, which shows that these two lines were important. And I am making a line on this low. So this shows that the market after the second high of MACD was straight. So it tells you that after the second high, it usually means a straight trading. However, as the low starts to break, then further downfall can come in. Example, right here. So these are the learning points. Then comes 0 on MACD. Now this is a 0 mark. Above 0, it's usually double stronger for a bull run. Below 0, the crossover is stronger, but it's not double stronger. It's single stronger. So there is a chance of making money, but it's not that strong. Whereas above 0, there is a higher chance of making money. Double the chance of what it offers on the crossover on the lower side. So it offers a complete different picture. So 0 line is an important line. Always remember this. Then comes the trend. If the blue line is pointing lower, then that means a fall is in motion. Now a fall can be like this, or a fall can be extremely flat. It did fall off, but it's within these two lines. But if you'll focus on the price from 29.57, it went to 26.99. So that's a 60 cent loss. Now you might say that's not a big loss, but in day trading, that's a huge loss. So that's the reason MACD works best for day trader. Because on the day trading level, you as a day trader cannot have huge losses. So your losses should be extremely limited, and that's what MACD does. It reduces your losses and it amplifies your profit. So you can make good money without much of a risk. And that's why MACD is best. But it doesn't mean that MACD doesn't work on the longer run. It works on swing trading as well, and it works brilliantly. If I change it to weekly levels, you will see higher returns. But the concept remains the same, that you have to look out for the things that I just discussed. Double highs, double lows, blue line. The blue line is the faster line. So whenever it moves up, it points that the shorter term trend is bullish. Whenever the red line moves up, it means the longer term trend is also bullish. But whenever the shorter term trend crosses the longer term trend downward, then it means problem, confusion. And as a trader, day trader, swing trader, or any trader, you don't need confusion. You only need good, simple profits. So whenever there is confusion, you get out. As simple as that. The fourth point, let me go back to hourly chart. The fourth point, whenever these red lines, by red lines I mean these red lines, not this red line, these red lines. Whenever these red lines point extreme lows, example, this low is extreme. Just focus on the future. You won't find this kind of lows. On the extreme moments, you can have huge falls. Example, right here, this is an hourly chart. So it went from 171.80 to 168.80. That's a $3 fall. Now on a shorter term chart of an hourly, it doesn't fall that much. It usually falls at a far lower pace because it's an hourly chart. If it falls $3 an hour for 4 hours, that's a $12 loss. That $12 loss on 171 means 4 or 5% fall. That's huge, right? So on the hourly level, it doesn't fall that much. But whenever these red lines are at their lowest level, then the fall could be huge. Now I'm using the word could. So it doesn't mean every time it will fall to extreme levels, but there is a far higher chance of a huge fall. The same way, whenever the gap is higher, because these lines, as I discussed earlier, means gap between the blue and red line. Whenever the gap is far higher and the blue line is higher and the red line is far lower, then even the highest returns are made. Example right here, this hourly close was 163.05 and this hourly close was 168.06. So that's a $5 gain within 2 hours. Huge. So whenever there is a huge gap, huge gains are made. But it also means that a reversal in trend is coming up. It will make you huge gains, but it usually means that the trend is exhausting because the highest return are made at the extreme end. When everyone is extremely bullish, then you make highest return. But when everyone is extremely bullish, then the biggest fish, example, if I am trading, I see everyone bullish, I just sell. Example in Bitcoin, when I saw everyone was talking about buying Bitcoin, I was selling my holding. Because I knew that if everyone is bullish, then that means that a fall is just around the corner. And that's exactly what MACD tells you. So at the highest moment, it tells you to be vigilant. Now this is an hourly chart, so it's the lowest chart. But still, after the highest point, you will see that the MACD thrust was lowered. It went straight. Although the price From here as well, it rose to further highs. But the MACD said sell here, and then again it told you to buy. So the thrust at extreme moment tells you that the MACD sell signal is coming. Now it doesn't mean that the sell signal that the price will stop. What it means is that you on the trading basis of MACD should stop. So these are the certain rules. These are the rules that will help you become a smart trader. I'm using the word smart. Smart trader never lose money. He always gains money. And that's what I want you to be. Because at the end of the day, what's the basic difference between you and the normal trader? The normal trader makes good trades as well. So what's the difference? The difference is a normal retail investor jumps into a stock and it suddenly drops and he got caught in that fall and he loses all his money in that one fall trade. Whereas a smart trader never falls. He is always in for the money. If a stock falls, he is out. He's out of that trading. He's out of that stock. Whereas a normal investor is in and he loses everything in a few bad trades. You can just discuss with all your friends who have lost money. They will tell you only a few trades bankrupted their account. So the rule of a smart investor is never to lose money. And by saying never to lose money, I mean you lose money, but you lose money at extremely small amounts so that it doesn't cost you much. And you make good gains. So if you made a $4 gain and you lost a 30 cent on the next trade, then that doesn't matter because you have $4 net profit. And that's why MACD is best to make sure that you turn around your account into a net profitable account on all bases. And by bases, I mean that you should make an Excel sheet to gauge your performance. What was your monthly return? What was your quarterly return? So that you can see if you're doing it correctly or not and act accordingly. Thank you.